All right, sweet. So we're gonna be going over, okay, essentially how highs and lows in the market essentially look, yeah. And this isn't me talking about catching reversals. This is more the idea that, let's say, cool, you know where the daily candle is gonna go. The next question you're asking yourself is the low or high of the day in, right? Depending, obviously, if you're bullish or bearish. So after you have the bias, your next big question is the low of the day in, right? Unless you're entering off of the retracement of the daily candle, which you can do. But if you're not, which probably you're not doing, then your next big question is like, cool, have we bottomed out and are we likely to continue from wherever we are? Yeah. So inside of this, I'm basically going to talk about some things that I use to do that. Um, so yeah, let's just go straight in. So characteristically, right, there's certain traits that highs and lows have basically, right? And like I just said, the information it can help us with is confidence that a high slash low or retracement is set in, entry models, um, and essentially it prevents us from missing, right, some entries. Okay, so first of all, we're going to go over liquidity rates and failure swings. Okay, so the way a low is put in, it's only ever really going to be in two different ways. It's either going to be a liquidity rate or a failure swing. So a liquidity rate, most of you are going to be aware of anyway, but it's essentially just the generation of some sort of liquidity, let's say beneath a higher time frame level, and typically a low is then going to get swept out and price is going to run higher. The logic behind this is this consolidation is basically building willing sellers and willing buyers inside of this consolidation. When price goes lower, it's engaging all of these guys who are looking to short, trapping them, and then sending price higher. Yeah, and you essentially they're looking to buy inside of this area and distribute the liquidity to old highs. The other one then is a failure swing. Yeah, this is not as common, but it still does happen, and it's quite important to know about. So in this example, it's going to be something like a sharp low is going to get put in, and then price is going to recover quite sharply, and then you might see quite a deep retracement. And typically, the way you know it's a failure swing, two ways. Sometimes you're going to get SMT, which I'm going to talk about in a minute, which I'm sure you guys know about anyway. But SMT is basically just when a correlating asset will sweep, and if, let's say, a different asset will fail to sweep. It's basically just a divergence between two different pairs. Again, I'll show you an example of that later on anyway. But typically, this is confirmed with a CSD, which is something we're going to be talking about inside this video as well. But essentially, just to put it blatantly, the failure swing is when we don't make a new low, but we fail to make a new low. So let's say, for example, we're in a downtrend here, and let's just say we're looking at bearish structure and bearish order flow, right? You can see how we're forming bearish FEGs. Maybe this is some sort of breaker. We push lower, we're filling FEGs. We're basically just making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low. Or sorry, not lower low. The low fails to make a lower low and then pushes higher, and that would be characteristic of a failure swing. So the nice way or the good thing about looking at it like this is that when a low is made, right, in price, you're only really thinking about two different ideas. Okay, so it simplifies it quite a lot. So for example, let's say I'm looking to be bullish on the day. You're either thinking, cool, a liquidity grab or a liquidity raid is going to form, or a failure swing is going to form, and that's going to be denoting like the low of the day, or it could be low of the week or low of the hour. It depends whatever time frame you're doing this with. So another key characteristic, right? If you watch quite a lot of my videos, you'll see this already. But I like to see highs and lows made with speed. Now, it's not 100%, right? I'm not saying every high and low is made with speed, but generally highs and lows are made with speed. Okay. So here's an example. We have a high. Obviously, this is a liquidity rate. You'll see how the high is made with displacement higher, and how are we identifying this as displacement? Well, you've got FEGs forming on the way up, right? 1 and 2. Also, we're getting large range candles. See how you have very sort of small range candles, and then displacement is this large range candle creating an FVG. In this case, you've got displacement up and displacement down. Okay, might not be as clear on the way down, but on the upside, it's left massive FVGs. Still on the way down, there's still strong bearish momentum. And you can see, like, for example, what would the difference be then between, like, if this wasn't displacement? Well, it would be something like this, chopping around, very slow price action, price not really going anywhere. So, yeah, highs and lows typically are made with speed. The way to conceptualize why this happens would be because, let's say this is a consolidation, and let's say above this high, traders are getting trapped long. So you've got breakout traders who are trying to buy at this high. If you think about it, smart money wouldn't want to spend that long, right, inside of this area. Okay, I don't even like to always apply sort of the market maker theory to it, but it makes sense, right? If, let's say, you're looking to trap people long in this idea, you would want to spend as less time as possible in that area, because for example, as this is just ticking around, people here might get anxious. They might think, oh, let me get out of the trade, blah 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 blah. If it's quick up, quick down, and it gives that idea of, okay, cool, these guys are trapped, and then they're getting yanked in the opposite end of the direction. So a lot of the time, okay, like I said, it's not every single time, and there's a trade that I'm going to go over on Euro that today where the high and the low was made really slow, but there was other ideas to make it high probability essentially. So yeah, strong up, strong down, very important. And here's just a few examples. Let's just say this is an uptrend. We're going higher, higher highs, higher lows, higher highs, higher lows, higher highs. You can see the major lows in this leg. Strong down, strong up, strong down, strong up. Even you can argue this is the up. Strong down, strong up. And again, I haven't pointed out everything, but here you have like a failure swing. This is sort of, this is a bit, to be fair, you can say it's a liquidity raid. Again, liquidity raid. And this is probably a larger liquidity raid on the downside as well. Yeah, I mean, this is just consolidation to go higher, liquidity raid, reverse, failure swing, liquidity raid. So this idea, even here, liquidity rates go higher. The point that I'm trying to get on, it's not to, I'm not trying to overwhelm you with the chart. Like, these individual ideas, obviously, there's a lot more important stuff that goes behind it. What time frame is this? Blah blah blah. Just showing you guys the idea of speed going down and up, essentially. Yeah, and sometimes you are going to get a bit of chop in the middle, but ideally it's something like this, or even like this, where it's very quick. It does depend as well the scale of it. So, like, for example, if there's a larger time frame low being put in, then of course price might spend larger or longer in that area. This is a really good one. This is I think this is an hourly chart. This low is literally made with one bearish candle and then one bullish candle, and the low is put in and price pushes. Yeah, even like something like this where we've swept liquidity, made equal highs, one candle's within that one candle, we've done a sweep and a push lower. So that idea of speed, that these examples are sort of good depictions of it. So after you've got that speed, or during that speed, right, probably your next question, because I talked about at the start about knowing when the low of the day is in. Typically, the way I do it is when I'm trying to find sort of the low of the day. If I haven't already got in via a limit set overnight, then I'm looking for sort of that change in state of delivery, or like an hourly closure, which we spoke about last time. So change state delivery, right? There's two ways in which you can do this, and all it really denotes is a shift from like a buy side delivery to a sell side delivery, or sell side delivery to buy side delivery. Yeah. So effectively, it's or you're trusting the low to get put in. Pretty much is the easiest way to understand it. So, for example, let's say I'm looking to be bullish on the day, and I'm trying to figure out, cool, when can I be confident that the low of the day is in? Well, let's say this is all the protraction. Again, you can see all bearish order flows holding, bearish order flow, FEGs, order blocks, etc. FEG, lower lows, lower highs, lower lows. This is the last collection of up candles before this down move. When that gets pushed through, that's that change state of delivery. So after we've got that, for example, then I could be confident and say, you know what, cool, this could be low of the day, right? And again, we're putting it under the context that you've got the daily bias set in. Yeah, I'm not saying like, oh, in any trend you're gonna see something like this, because if, for example, we were bearish, then any run beneath an old high, I would expect to just be a total suit to go lower or liquidity rate to go lower. It's always the context that's the most important. So again, as the bearish order flow is coming down, let's say this taps a higher time frame level and we're looking for the day to be bullish. Once we get a CSD like this, then we could be confident in saying, yeah, cool, this low should be set in and price should navigate its way higher. And again, you can see in this example, yes, obviously it's hindsight, but you can see once this happens, and you can start to see the bullish levels holding and potential bearish arrays are getting inverted and price is pushing higher, and then bullish arrays are holding and price is slowly moving higher. Any run beneath an old low is acting as a liquidity rate to go higher. Sorry, I should have said that. So this is just one version of the CSD. This is like a formation of an order block. You can also get the formation of a CSD via a IFEG. Okay, so in this example, we swept liquidity off screen. The 1 hour's come down. If you went and used the logic from what I just showed you, you'd have to wait till this level here would have been closed above. By that time, half the move's pretty much done. And that's why it's nice sometimes to use the FEGs. I mean, it's not a case of, oh, I'll use one over the other. It's just whatever one is present pretty much. So if the FEG is there and the FEG gets closed through, then cool, I'm going to be looking for that as a CSD. And all it's really doing is just telling you, okay, cool, bearish arrays are no longer holding price. They're getting flipped. They're getting closed through. And therefore, bullish arrays should start holding, yeah? So, yeah, pretty much, again, let's say we were bullish on this specific day. Price comes lower. This low can be trusted, okay, as soon as we start flipping the old bearish arrays. Yeah, so again, the IFEG can be used CSD, let's say hourly, 4 hour. Those are probably the best time frames to do both of these on if you're looking to capture the daily range. Okay. Finally, we have SMT. Most of you guys will be aware of what this is as well. But if a low or a high is being put in, then if we have SMT, it normally makes the setup extremely, extremely strong. So in this example, we have this low, right? This is one of these is ES and one of these is NQ. I think this is NQ. I think this is ES. Might be a different way around. It has to be between correlating assets, and when we see a run beneath an old low, so this low and this low is the same via the timing wise. So on this asset, the low's been taken. On this one, it doesn't. Now, SMT typically needs to be confirmed with a CSD because, for example, without the CSD, you're not going to know if this is just slowly going to trickle down and take this low out. Okay, so I do see that a little bit where people will use unconfirmed SMT. There's a time and a place for it, but I think majority of the time, it's better 9 times out of 10. The only time I'd say, cool, you could get away with it is probably a news release where you know that low of the day is going to get set in that news release. So yeah, after we get a closure above this high, we then could be confident in this low. So again, let's say I'm bullish on the day, price protracted lower, underneath a low, CSD, boom, play the CSD, target the equal highs. Yeah. And the fact that we have the SMT here just makes the idea more probable. Again, it could be this one, CSD, boom, play. And this is if you guys are using daily cycles, it's an AM continuation cycle. I should have actually written the date so you guys could check this one out. But if we go over to the charts, and I show you a couple examples. So these are all ideas that I mentioned inside of my Discord today. I'm not going to show you, but yeah. Hold on, I'm just reading a question. With SMT, do we play the pair that makes the low? Yeah, so I used to be really strict, and I was like, oh no, I have to play the one that is the weaker or the stronger, depending on if you're bullish or bearish. Now, to be honest, I don't really mind that much. it's strange. Like I've seen it so many times where one of them will fly and the other one doesn't, or the other one doesn't. It doesn't. It's I just play the one that I think looks the best in terms of the setup most of the time, to be honest. Which has the cleanest targets, which just makes sense the most. Um, so yeah, I could actually pull up the Discord, but I don't know. Oh, I don't even know what tab it's on. Anyway, so inside of my sort of premium outlook, right? I was looking for uh, today to be bearish, right? So if we just pick apart what we were looking at today, we had the daily IFEG. Um, I'll break it down from a bit higher. If you guys follow my premium outlook, you already know where we are. We've filled in the weekly FEG, looking for bearish week to form, etc., etc. Yeah. So today, we had the IFEG, which was rejected from yesterday. So we had previous day's high, push up higher, and then go lower. Typically, I don't trade Thursday, which is the day before NFP. But based on all my data, there's almost always a trade on the Thursday. So I basically just said stuff, cool, I'm going to entertain it. I'm going to have a look. So I should probably pull up the Discord to show this, but I don't really want to mess up the recording. Let's just have a look. Alright, no, I don't want to go that far back. Yeah, let's just leave it anyway. So 4-hour FEG was what I was looking for the high of the day to get made in. The way you can literally approach this is just setting a limit on it and putting your stop in a reasonable place. Obviously, the SL is not great, but it's more about thinking about building a position out, which is the main thing. So if we combine some ideas from even from last week's call, we have the 4-hour FEG, we have the swing point put in, right? So it's 1, 2, 3. So we know that there's a 70 to 80% chance that this low is going to get taken, and obviously that price should run. We have on the hourly CSD, the hourly on the CSD, the CSD on the hourly, on DXY wasn't as convincing in a way. It was looked quite aggressive, but Euro looked fine. But the key, so one of the things that I just mentioned to you guys that, so I was in my premium outlook, I originally said, cool, I think high of the day is in, and then we have 3 news releases in New York, and I thought to myself, potentially, because of how slow this this high was made, that this news release might actually take us out and then go lower. It could have went both ways, to be honest. In the end, it obviously just melted off. This was just a simple MY continuation cycle where we had London, which is high of the day, which we like to see, and typically that is the most high probability scenario. If I just go over to Euro, it looks a bit cleaner. We have the CSD put in after a sweep on liquidity, which was Asia as well. And then we ended up just tagging it during that first news release and then playing around and pushing higher. I actually made a mistake on the hourly here after we had this really poor closure. I felt as if I wasn't 100% sure if we were going to take this high, and I thought to myself, oh, day before NFP, maybe we're just going to like fuck around basically. But if you do just scale out, and this is why I always try and remember to myself to always look at these 4-hour and 1-hour closures. If you just scale out to the 4-hour closure, it looks great. Like there's nothing wrong with this. It's formed an order block. It would make sense to see the next 4-hour candle just create an immediate rebalance and then push higher, right? And obviously you can see that's what it ends up doing. So in terms of putting together everything that we've just spoken about with regards to, I know I flipped between Euro and DXY. Let's just say we're looking at Euro. You're looking to be bullish on the day. We've tapped this IFEG. This is the drawn liquidity. Obviously, you have a higher target as well. And then in terms of, if let's just say I split this, so the start of the day, the actual daily candle would be here. Anything beneath this area, right, is obviously what we're looking to get long inside of. This was the 4-hour IFEG, and yeah, once the hourly CSD's in, then again the low holds and price pushes higher. The only thing, like I said, this doesn't have is the fact that the low was actually made with any speed. This is extremely choppy, quite uncharacteristic of a low. But overall, again, it really depends how you want to structure things. I mean, for me, in terms of my plan, it's like it's not necessary. It's not written in my plan. Oh, a low has to be made with speed for me to take it. It's just ideal. It's just an ideal scenario, and this wouldn't or shouldn't affect the decision making in terms of the CSD. Like, it may affect the decision if you were trying to play London, but as soon as the CSD is formed, you want to assume this low isn't gonna get run out, right? And today I actually made the mistake of still assuming after the CSD that this low could get taken, right? So it doesn't mean every time you're gonna just play it perfectly. Sometimes uh, you can interpret things in a different way, right? I was thinking, cool, we've got these 3 big news releases, and yeah, would it just be nice for a sweep? So that was DXY today, and then gold. So I wrote in my premium outlook that I wanted to see this high get taken, and I essentially mentioned 2 scenarios. So either going to go from the daily FEG or this 4-hour FEG here. Okay, and the reason why both scenarios are valid is because if we go back on the daily and we go here, we've got an in-bar day. So what typically follows an in-bar day either is a strong expansion to liquidity, or it's essentially going to rinse both sides and go. Right? That's the way I was looking at it. So there you go, both scenarios completely valid. It actually does end up running out both sides, which is quite funny, but just not in the bullish way. So again, tackling this one, 4-hour, we've sort of rounded off here in a way. Failure swing, pushed higher, market structure shift. That's another way, to be fair. I didn't even mention that you can put on the list in terms of picking a low and a high. Market structure shift is probably the one that happens the latest, but the one that would give you the most confidence that a low or high is put in. It's just a lot of the time it can take its time to do that. So in this example, we have the daily FEG, 4-hour FEG. A couple ways to target it. You could have literally just stayed on the 4-hour. Once we've gone ahead, filled the 4-hour FEG and closed bullish, as mentioned with the call last week, we formed this sort of pin bar. You can literally go ahead, enter, stop in a reasonable place based on probably the 1-hour time frame, which we're going to look in a minute. You'll probably squeeze a 2-hour out of this just plainly on the 4-hour chart. On the hourly as well, we get a similar thing here. If I just go to the 15, it's very similar to Euro. We get the London protraction cycle, Asia, London low comes in. I get this question quite a bit sometimes about, is it okay if the low is made between 6 to 7? Yeah, it's fine. No issues with that whatsoever. If it's made after 5, I pretty much view it as a London protraction cycle anyway. Normally 5 to 6 rarely ever forms the low, but yeah, 6 to 7, I've got no issue with that. So low being made from a 50-minute perspective, I know everyone's going to be screaming, market structure shift, FEG, another FEG, 100%. But what I really like about this setup and how I normally tackle things is I like to pair the hourly closures with those 15-minute models. So in this case, this is almost like a 4-candle swing point, right? Which is like 1, 2, 3, 4. After we round off this low, okay, and we've filled the FEG in, we've swept out liquidity, and then we've pushed back above the FEG fill, like I was talking about again in last week's call. Then getting inside of this 9 o'clock candle, right, it lines up with this market structure shift plus FEG, yeah. And let's say, cool, you didn't want to play that one, or you did play that one. Once we get the hourly closure, this one is the 4 hour closure, and you've got an option to scale in. Both of these also lining up with an hourly immediate rebalance. And again, this is another 15-minute model, market structure shift, FEG, push. So you have multiple ways to scale in, to get behind the move based on that information. With gold, I will look at silver as well as potential SMT. Right, this sometimes it just doesn't look that clean, so I won't force it. But if it's like major highs and lows, then I'll look at it. But yeah, these aren't looking the greatest right now. So let's say there is no SMT there. But yeah, you might say, oh well, you didn't mention, or there is no like CSD involved in this example. Again, we can use the idea of swing points. So anything like this really intertwines with last week's call, where the hourly closures with the FEG fills and the swing points and the engulfings, these two ideas relate together a lot. Yeah. So in my plan, I will look for the low to get set in via like it's three different things. It would be like the CSD or the closures, pretty much. I don't know why I said three. But yeah, it's either going to be the CSD or the closures, pretty much. So once that low is in, again, if we just pick apart the start of the candle, you've got the protraction lower, we form the equal highs, potential, and this is another thing, right? And this is even something that I'll still mess up on, is if there's two scenarios and they're both high probability, you should just take the one that is higher, right? I'm naturally quite a conservative person, so if there is like another scenario that price can play out, my nature is always to just leave the idea or the setup. However, if you're in the midst of an area or a high probability area where we've built up a consolidation, we can clearly just continue 4 hour structure and it aligns with my plan, but I have a lower area, I will typically like defer the highest setup. But that is something that I again journaled, improved on, etc. And that is something that is quite important to identify, as like the things that you know you have a tendency to do. So yeah, the fact that this would align with the idea, etc., strategy, whatever process, would mean you'd still want to get on side with this idea, regardless of knowing that price could drop from a lower area. And that's a big thing as well about nailing sort of high of day, low of day, which is something I still do quite a bit, is just being comfortable with the fact of you might take an L trying to play the first entry, but because you're playing like hourly closures, for example, you're not going to get wicked out, or you're not going to get stopped out a million times before this move goes. Yeah. So like, for example, let's say you get the CSD, it's like playing this with a stop here is fine. If you get wicked out, it's fine. You're just going to give it another go anyway. And if your bias is right, you're going to be fine. Yeah. If I take more than two losses for the day, then I'm finished trading anyway. So it isn't like you're playing a 50-minute level and you could get stopped out about a million times inside of here. It's like there's only 24 candles or hourly candles in the day. I was going to say half, but you've got like a quarter of them done at the start of the day. You know, likely London, it could be low of the day statistically if you're playing FX pairs, especially something like pound or euro. And then if the low does get set in, then again, play your chances. So, and yeah, that's almost like a pep talk to myself. But yeah, those two were clean. I think it was. There's no point really talking about this one. I was looking for a tag to this FEG and push higher, and we literally done it inside of this candle. I did want to see the lower area, but once the high was taken, then I wasn't interested in this anymore. So yeah, we'll just leave it there really. If you do have any questions, then feel free to ask. Otherwise, I'm gonna end it there.